right, here we go. Hey, everyone. Welcome to today's live stream. Can you see me or hear me? I'm not sure. Today is Monday, August 26th, 2024. Hope you're doing great. Hey, I wanted to come on the show here and talk about this issue of circuit breakers. And I know there's some folks who are really concerned about the equity markets and the volatility, but I wanted to share this with you. There is, I believe, after the 07-08 situation in the equity markets, what happened was circuit breakers were added to the equity markets. And what that means is this was for this article came about from earlier this month, August 5th. Market was down quite a bit. People were panicking and wondering, what the heck do I do? And is there something in place to assist if the market pulls back? And there is. So so here we go. The S&P 500 was down 2.6% in recent trading. While that's a noteworthy pullback, it's nowhere near the drop needed to trigger the first stock exchange circuit breaker, which pauses trading for a minimum of 15 minutes when the S&P falls below 7% during trading hours. So if the S&P falls below that 7% threshold, trading stops for 15 minutes. And then it says the New York Stock Exchange has another circuit breaker when the S&P 500 falls 13%, and a third when it falls 20%. All three triggers apply to all markets. So the NASDAQ has the same breakers. The third one halts trading for the remainder of the trading day. It's important to keep perspective. The S&P 500 is still roughly 200 points above correction territory and has rallied about 1.3% from its lows earlier in the morning. So that was a big dip in the day, and then it came back a bit. It's still up. This is where perspective comes in. It's still up 9.1% this year and 15% in the past 12 months. The NASDAQ has entered a correction last week, was down 3% on Monday. The Dow down 934.5 points or 2.4%. And, that was the panic of, oh my gosh, the Dow's never dropped 935 points. Well, it's never been at the level where it currently is. The market is starting to question rosy views of a soft landing where the economy avoids a downturn as inflation cools, but that doesn't mean a recession is around the corner. So here's what is really happening, because we got to look at, what's happening in the forefront, most importantly, what's happening behind the scenes. When these triggers happen in the equity markets, if there's, a falling of the equity markets, there are also circuit breakers that trigger buying into stocks. And in 2007, 2008, during that time period, basically the Fed told all the big banks and brokerage firms, hey, you've got to put capital aside to invest into the markets, kind of basically prop the markets up in the event of a sharp sell-off. And every firm complied, and in fact, we will see that what ends up happening we will see what happens in these markets. They're called what I call flash crashes, where they go down quickly and they come right back up. And that's because the market and institutional investors are looking for better prices for stocks, are looking at entry points that they can go into certain companies at a cheaper price. Remember, a lot of companies have stocks that are shorted, and when stocks are shorted, the money is made after the stocks are purchased at a lower price after being sold previously at a higher price. So it benefits a lot of institutional investors, banks, brokerage firms, venture capitalists to have stocks come down occasionally so that they can buy them back and close out that short position. So what I'm saying is there's always going to be volatility in the market. It's set up that way. You know, we know the big players, BlackRock, State Street, Vanguard. They own, what is it, 85% of the S&P 500? Literally 85% of all the stocks that trade on the S&P 500. So they're not always long these stocks. Oftentimes they are short the stocks, which means they profit as the stock goes down. So it almost feels like they're playing both sides of this game. They're investors for the long term in certain portfolios, but simultaneously, I think they're also the short sellers with some of these stocks because they know that the market will continue to be volatile. In fact, volatility probably has a lot more to do with the institutional investors than we even know. So this week, I wanted to point out, this company's looking really good, MFA Financial Inc. It's on our streaking stock rockets to the moon list. Here's the details. It took its initial hold on that list August 14th at 1164. And then we have the closing prices for those last 8 days or so. Now trading at 1220. Market is off today, but this stock continues to power higher. Check it out. I think it's worth looking at. Let's just look at the chart and why the chart looks terrific. Stock is trading above all of the averages currently. And you can see, so it's got all that support. We've got green above red. There's the stock price, $12.19 above all the averages, green above red. We do have a lofty MFI. The MFI sitting at 87. That is in the overbought territory, so it may be pulling back a little bit. And that seems to be the case with this trading. If we look at, many green days and then red, green. But I was looking over here when the stock was at 10 in July 8th. And we've got many green days, but then just a few red. So we've got a few, but it looks like that's the most recent trading pattern, is a lot more buyers coming into the stock than sellers. So, I think the MFI is going to end up going higher, but I think this is also worth taking a look at. All right, big earnings coming out this week. It's a huge week for earnings. Let me pull up here on what is expected this week. Of course, NVIDIA, that's going to be closely watched. But in addition to NVIDIA, we've got, let's see, Birkenstock, Abercrombie, and Fitch. I always have such a hard time saying that name. Abercrombie and Fitch. Salesforce. So NetApp. We've got NetApp. Let's see what other big ones. And those are the main ones. Birkenstock's going to be interesting. I think they're going to have terrific earnings. NetApp, Pure Storage, PSTG is the ticker. Just very interesting week coming up. NVIDIA's earnings you need to be watching closely. Previously, that's been the stock that's really set the pace for the equity markets, is NVIDIA, and in that AI space as well. So the company that is closely aligned with NVIDIA in the AI space is Supermicro Computer. Big sell-off this morning. difficult to watch, but it's recently had a 120-point gain in this stock, so it's giving back some profit here. And like, it is what it is, right? Things, this volatility is going to continue for sure. So have a great week. Take a look at some of these earnings and really stick with some companies that you can feel comfortable. Frankly, I'm really liking Rogers Communications Inc. here. If you're a Canadian investor, trades on the Toronto Exchange, like, it just a powerhouse of a stock that just keeps going up higher and higher. And my favorite dividend play this week is, in fact, MFA Financial. Close to, look at this, 11.61 yield. Pays $1.40, 11.61% yield. Not many stocks pay that type of dividend, but here you've got an opportunity with this company that I think is going to be fantastic. So have a great week. Thanks everyone for your support. We appreciate you all, and please continue to share our software with your friends and family. If you're watching on YouTube, please hit that like button, subscribe. It helps the channel. It gets us out in the algorithms and allows more and more people to find us. It doesn't cost you a thing. So if you stayed in here with this video this long, please hit that like button and/or post a comment. Let me know. Like, tell me, what was your concern in this equity market? Did you feel like, oh, this is going to be tough sledding ahead? Of course, the volatility is going to continue until the election, maybe through the election. It's going to be one of, and we say it every time there's an election in the U.S., it's going to be one of the most highly anticipated and interesting times as an investor. But thanks, everyone. Bye for now.